I would say nodes is turning into DeFi basically, right? And so the last 5 years, we sold nodes so people could basically hold Bitcoin and move it somewhere. I think the next 5 years, we're going to sell infrastructure so people can borrow and lend against the assets that they've purchased. Say what you want, about all the feelings around Trump and the administration. But, if I just look at that very particular thing, I think what I've seen, which is actually surprises me a little bit, is a delivery on all things that they said they would do, which politicians normally are not really doing, which is unusual. And what I've learned is, which I didn't know, is that when my money is in an American bank account, the bank owns my money. I don't own it. If they don't want to give it to you, they don't. It's a fantastic example and just really reiterated to me how important it is to have independent, decentralized crypto rails over time.
Hello and welcome everyone to the New Money Podcast, the show where we talk about crypto and hopefully find out how the future of money actually looks like. I'm still on the road, so we do not have the Lydian lion in my backdrop. Usually, Konstantin, we have the oldest coin in the world, or some sort of replica of the oldest coin of the world, here to remind us that money has quite some history, but hopefully it still also has some exciting things in the future ahead. So we're excited to have you on the show today, Konstantin, CEO and founder at Blockdaemon, originally from Germany, so a fellow German, which of course will make this episode even more fun. Now based in SF, and we're excited to kind of jump right in and talk all things Genius Bills, stablecoins, crypto and banking, Choke Point 2.0. We're going to talk a bit about company building and how you thought about building the company so far, and about staking. And I think that's the mini agenda. We're going to try to get through everything. But Konstantin, great to have you on the show.
Well, thank you, Ferdinand. Very happy to be here.
Awesome. Genius passed yesterday. What's the role you guys are going to play in the stablecoin era? And how do you feel about positioning of the company now?
Yeah, I mean, it's a huge milestone for the industry. It's specifically also around the process of getting bipartisan support for a crypto-related bill. And so first and foremost, I think the most exciting thing is it really represents the shift in regulatory guidance and government affairs that we've seen in the US since the new administration came in as it pertains to crypto. And so it is a really, really important step. I think it teases the larger bill that's going to come, which is going to be the market structure bill that the White House, Treasury, Senate are all working on, and we're hoping that will come out sometime Q3. And we work with the respective agencies there and provide input quite regularly. And so that's point one. Point two is it obviously also just shows that stable token and blockchain technology in itself is just a lot more financially viable and efficient than legacy rails, right? And so the reason why this is so exciting is that you, in theory, now can do a lot more, a lot cheaper at much larger scale. So it's also a win for sort of blockchain architecture to become really a mainstay in the financial services and payment stack. And so I think that's really, really important because when you look at the large institutions that are entering the space, they need to learn about blockchain technology. They need to learn about how to evaluate blockchain vendors. They need to learn about how to really think about quality here. And stable tokens are a very safe way to do that and build that capacity, right? Because you're not exposed to the crazy velocity of the underlying asset and the insanity of the respective community if you pick a crazy one. And so I think it's a really good learning ground. And then also it's obviously a massive market for payments and settlements, right? And so yes, a huge deal. I think from a Blockdaemon perspective, it's relevant because we refer to ourselves as the largest infrastructure provider to institutions in the world. And we define infrastructure as lots of definitions. Ours is very basic, which is we manage basic nodes and the facilitation and connection that are blockchain native for institutions. And so our customers are the JP Morgans and the Goldman Sachses and the Citibanks and the Fidelities and the PayPals and the Robinhoods and the Bank of New Yorks and all those guys, as well as the Coinbases and Krakens and Binances and whoever really you think about. And so what we do is we facilitate basically the bundling of transactions as well as securing the networks. And so for us, Key will be wallet architecture. We provide wallet architecture. They can include stable tokens, so really digital asset frameworks for these institutions who want to process and use stable tokens. And so our wallet supports stable tokens. I think that's one. And then two is continuous connectivity to blockchain networks. I think, what you'll see is that a stable token doesn't necessarily live in isolation, right? And so you want to make sure you can trade it, connect it. If you take a USDC, for example, you might want a connection to Coinbase. You might want to even run nodes on some other networks to monitor certain activity. And so that's sort of our continuous evolving role in the market. And so, it's an exciting development. And I'd say it goes with what we see in the US in general, which is, just a massive increase in crypto-related adoption and infrastructure purchasing. And so, for example, Q2, our pipeline basically doubled over Q1, which, we're a little more mature as a business. That's a pretty remarkable development, right? And so us, we see just more and more familiarity with blockchain technology and crypto, and a lot less fear now also that the government is going to come after you if you do anything wrong. And so clear regulation obviously works really well.
Yeah, and so many questions, and I think we're going to unpack a bunch of these things. But maybe one quick question, like you always talk about stable tokens. Is that like an opinionated thing that you're not talking about stable coins, but stable tokens, or is it just a preference?
I don't know. I like the word token just because I think it serves in technology. A token can be used for a lot of different things. A coin always has sometimes a negative connotation, but no, it's not a deeper thing.
I appreciate it. So it's the first time I've heard it. If I think about Blockdaemon, I kind of like let's say we have the 3 flagship products, and correct me here, to also make sure everyone who's listening has a clear picture of what you guys are focused on, right? I have staking, wallets, and node services. What do you think is the most important one of these 3, and how do you see these evolving over the next couple of years? And have I missed something?
Well, yes and no. So basically, the way we view the infrastructure ecosystem is that all assets that are cryptographically secured should move on chain and be fully automated and seamlessly functional across chains and networks, right? Our goal is to ensure that there's less cost, more transactions with easy access for everyone over time. And we do that by working with institutions. Now, just to explain basically what nodes are basically the individual copies of when we talk about distributed ledgers. And nodes are also the access points to submit transactions to the ledger, right? And there's different mechanisms in how this works. But basically, if you think about it, it's a universal bank account, and you need to run a piece of software on a server in order to do that. And the reason why people pay us to do it is because these pieces of software tend to change a lot. And they tend to change not in a linear manner. And so obviously Bitcoin Core isn't maintained by Microsoft, where it's just every first of the month at 3 p.m., please update your client. It's an open source community with all the beauty and insanity that comes with it. And so abstracting away the need to be neck deep in these communities and anticipating developments and all this type of stuff is really what institutions pay us for on the node side. And nodes are really needed to submit transactions. And the main service point there was basic transaction and data pulling. Now, the next step, and just maybe to add to what you said is I would say nodes is turning into DeFi basically, right? And so the last 5 years, we sold nodes so people could basically hold Bitcoin and move it somewhere. I think the next 5 years, we're going to sell infrastructure so people can borrow and lend against the assets that they've purchased, right? And so to me, that's part of the node vector, right? It's really ultimately the full DeFi ecosystem. And that means DeFi APIs, the ability to connect and facilitate multiple networks at the same time. And so rather than running an individual node, I think what people will start to do is really work through DeFi APIs and networks to facilitate purchasing, lending, and borrowing, right? And so I think there's a huge strategic shift on infrastructure coming. And so Blockdaemon, we acquired a DeFi company. We've had DeFi APIs for a while. And so part of the new products we've launched are sort of earn widgets that run on top of our nodes, for example, that allow users to ultimately leverage and utilize all these different DeFi pools, for example. And so the node business model is shifting from a MRR USD, so fixed monthly costs or API calls, into more of an earning type business model, which is obviously great for us because it exposes us more to total volume revenue recognition than individual MRR USD. The staking is very adjacent to that. Staking is also simple nodes. And basically here it's a form to secure a network and earn rewards. And we do that for institutions. I think staking also is going to shift quite a lot over time. I think we're at an interesting phase where staking, I think, really is created to incentivize mainnet launches for networks and to scale them and pay people to run heavy infrastructure. I think with quantum compute, AI, and so forth, running infrastructure ideally will get less complicated and less costly over time. And so my assumption is that the staking yield and running individual infrastructure for institutions and individual users is going to be difficult to do at scale. And so I think what we're working on is one, really sophisticated APIs. So you can engage with all these networks and earn yield directly from these APIs, as well as, for example, staking index tokens and financial products that allow you to expose yield here, but where we're the aggregator of all the individual assets. And so I think on the staking side, I do think the architecture and infrastructure will change over time as well. And then the wallet part really just basically pulls it all together. It's just basically, we've enabled people to basically purchase and hold assets, and we allow them to secure networks and earn fees. And then they're like, hey, we need to put these assets somewhere. And, the custodial landscape is perpetually complicated. And so we sell software to institutions so they can very easily build their own wallets. And so, to me, it's all one simple flywheel, right? Like it's the life cycle of a token, and we have a little bucket that generates a fee wherever the token sits in its life cycle. And so that's always been our strategy. So we viewed ourselves always a little differently, I think, than any other infrastructure company. We're really basically a full service institutional software vendor to cover every aspect of crypto. Right. And so we connect you to anything you need. Is it a software license for a wallet, access to liquidity pools, access to data, access to transaction rails, or staking yield? Then you can come to our portal as an institution and activate and stack these bits together. And so the solution spectrum right now for an institution is you have to work with a lot of different people in order to engage with crypto. You need custodians. You might have different custodians for different tokens. You need staking vendors. You need data providers. You need, individual wallet stack solutions. It's a very convoluted, super messy stack, and Blockdaemon really intends to pull it all together in a really highly secure manner. And so I think they're all interdependent. So I wouldn't say that one is more important than the other. I think we need to make blockchain technology more stable and more easily accessible to institutions at scale. And that's what we're solving for. That was long-winded, but there you have it.
Oh, I appreciate that. Is any kind of part of the token lifecycle left where you feel you could do more and you could own more?
I think interoperability is really important to us, and looking at the sequencer space, for example, around L2s. I think we're really looking into oracles as a service, things like that, right? Like anything where our expertise in running really stable rails and transaction platforms is helpful. And so, so I think that part is really interesting and complicated. I think crypto also is inherently difficult and complicated. It's kind of funny to me how you can build these solutions and stacks in a lot of different ways. And so for Blockdaemon, it's also really an engineering expertise that we have evolved our teams to work on multiple projects at the same time with lots of customer input really, really quickly on a common code base and infrastructure base. And I think basically what I'm saying is I'm not fully sure. What I can tell you is that I think in 2 years, blockchain infrastructure is going to look foundationally very different to how it looks like today. I have some ideas, and I want to be part of shaping what I think this should be. But I think what you're going to see specifically, again, with AI and quantum compute and things is that cryptographic networks are going to evolve a lot faster than they used to.
Let's zoom out for a second before we kind of zoom back in on the specific products where we have quite some things to talk about. Let's zoom out for a second on kind of like refocus on the political agenda in the States and your perception of that. Maybe just kind of like on a high level, Trump is now, I don't know, like the admin is live for 6-ish months. How do you feel the admin has delivered on the crypto agenda? Are you content? Do you think they're lacking in areas? What's your POV?
Yeah, I mean, and Well, let's put it that way. I think on crypto agenda, something remarkable has happened, which is, having worked also actively with both sides of the political spectrum before the election to educate them about cryptocurrency and try to really change the sort of stalemate we were at with lawmakers, is that the things that the current administration said they would do, they've really over-delivered on. And so often in politics, it's an interesting feeling when you work with politicians for a while. And so you might, say what you want, about all I'm sure, there's complicated things and feelings around Trump and the administration. But, if I just look at that very particular thing, I think what I've seen, which is actually surprises me a little bit, is one, a delivery on all things that they said they would do, which politicians normally are not really doing, which is unusual. And so we've seen really comprehensive change across all the different government agencies with people who really are very crypto supportive. We've also seen very thoughtful rules and interpretations being launched. It started with SUB 21, accounting guidelines, the Genius Act bill, kind of all these different pieces that are going to culminate in a first market structure bill in a couple of months, is that it's actually a fairly thoughtful, well-defined process. And so it's interesting because obviously in that very particular field, the previous administration was atrocious, which meant there was really no thought paid any reality of the physical networks. There was really no interest in engaging with anyone around fintech innovation. And it was a totally politicized subject where, really people were not interested in thinking about thoughtful regulation at all. And so it's a huge, huge shift. And I'm very surprised that you have hopes when something happens. And I think those hopes have been exceeded. Now, there's complexity here, right? Like, do I think it's great if the family if the president runs and launches tokens? I mean, I think that's, I don't know. I wish that wouldn't have happened. It's all part and parcel of a crazy ecosystem, but I'd love to see that regulation is coming and laws are coming to protect consumers and protect companies. Likewise for us, we've been really impacted by the previous administrations. We were unbanked. We had to cease our consumer staking services. We were really put at a disadvantage to, for example, specifically in staking, to our competitors. We're one of the only US domiciled staking infrastructure provider, for example. And so for us, the market got a lot less friendly than it was for everyone else operating in the ecosystem. And so I feel a huge sense of relief.
I appreciate that. Talk to me a bit about the debanking episode, right? Like, so at Ivy, my company, we do payments for many crypto companies. So we have lots of appreciation for that space. But how was that episode for you personally, for the company? What happened? What was the timeline of events?
Yeah, I think specifically after FTX blew up, the proximity of the FTX organization and founder to the democratic, congressional, and presidential ecosystem meant that the Democrats were really keen to distance themselves from this. And they saw an opportunity to, I think, make crypto the stand-in for Wall Street, to really avoid having to engage Wall Street meaningfully. But they could maintain the mantle of we're for the small people, we're against the big, rich, crazy institutions. And obviously crypto looked like a really easy target for that because there aren't a lot of big institutions in crypto. There aren't also a lot of rich people in crypto. And so it's one of the fallacies if you compare like Wall Street and hedge funds and, like that world that really basically is also so deeply ingrained into the political process. It was just really useful for the Democrats to go all in against crypto because it allowed them the high horse of moral messaging without actually having to really fix any of the bigger financial issues. In the US, the big one for me is that, nearly 30% of people in the US are unbanked. There's a massive amount of people who can't get bank accounts, for example, and there's really no interest in changing that. And so on either side of the parties.
How are 30% of people in the US unbanked? That's crazy. I think Europe has like a nearly close to 100% penetration.
Well, I think what you'll find is that one, obviously there's lots of immigrants, right? And so it's very hard for you to get a banking setup if you're not a fully recognized legal citizen. And in the US, you had this sort of shadow citizenship, which is, immigration is accepted, right? Like people who work in hotels and fixing roads and everything else, they're here for their life, but they might never, ever get citizenship, which basically precludes them from a bank account, right? And so the same is true for, you just have a different poverty level in the US. And specifically in the, minorities, actually, having bank accounts is pretty tricky. With the credit score system here as well, getting access to money and things is hard, and so it's been really interesting how hard it is for people to live in that world, right? And so it's the same for me. I'm an immigrant here, and I've had horrific stories with banks. And it's really fascinating to me how the assumption of lawmakers is if we prevent people from having access to comprehensive financial services, they can't get scammed. And, that is just a crazy statement to me, because to me, having access to free markets and currency is a human right, basically. It's so important in our society. And so, kind of throttling access here seems to be a really, really, I think, dehumanizing idea. And it's a shame that the democratic establishment went that way, right? Because for me, I'm very active in politics in the US. Like, I'm definitely a very progressive-minded individual. I believe in social services. I also believe in free capital markets, but I believe in law and regulation and the freedom for people to do and choose whatever they want to do and whoever they want to marry and all that type of stuff. And it's funny to me that that construct of values isn't really getting represented by any party, right? Like, I can't, and so that's been really difficult to recognize, is that it's not as black and white anymore. If I look at probably the compounded effect of human suffering in the US society, I think the Democratic policy engine probably led to more suffering than the Republican one. And that's interesting to me, because there's a lot of goodwill. And so the big argument here is like, if you have ethical processes, but they lead to unethical outcomes, what does that say? And that's kind of, I think, what happened in the previous administration a little bit. In California with housing is a great example. Like, we have a lot of great legislation around environmental zoning and 1,000 other things that are all in itself really important, but in aggregation mean there's no housing built and people don't have houses and live on the street, and so you're kind of like, well, how great is that then, and so it's shifting to a result-based regulatory system is important. And I think that's a really, really good development in the US. We got to see, I think, I'm not a fan of discriminating against minorities at all. And so there's also things I really don't like. But timeline-wise, FTX blew up. We banked with Bank of America and Silicon Valley Bank. And Silicon Valley Bank blew up, and Bank of America basically gave me a phone call and said, we don't want your business. You have 24 hours to move your assets out. We had hundreds of millions of dollars with them. My money and my investors are, JP Morgan and Goldman Sachs and SoftBank and Sapphire and Comcast. And, we're not a token sale kind of business. Like, it's very clean money. And we also don't have a token and stuff. And so, you could tell it was basically just a decision. Like, basically what I was told was like, it's been signaled to us that it's in our best interest not to do business with you. And when you're a businessman and you have employees, we missed, payroll. I have engineers who pay mortgages and couldn't get paid. And those are normal caring professionals. And those aren't crazy crypto traders or people like that. It's people who've worked at Google or Facebook before. And so it's been a really difficult time. We fixed it. We managed to, with a lot of support, to handle it. Back then, it just felt like another Wednesday. Obviously, we were getting shut down and things happened at really fast intervals. We never left the US. We always believed in this market, but it got really, really complex for a minute there. We're lucky that we have a good board and, trusting investors.
Who stepped in at that point in time? Like, which bank took over the assets and was there to kind of like help out?
Well, actually, funnily enough, we had some Midwestern intermediary banks, and then Silicon Valley Bank in its new configuration started to bank us again. For us, it was an interesting situation because we have 3 of the top 10 global banks as major shareholder, with major shareholder denomination, JP Morgan, Goldman Sachs, and Citibank. And so we had like some help here and there, but it was really hard. And yeah, it's interesting when it happens to you because obviously it's such a great example of why crypto is important, right? And so that's exactly why, because you're like, hey, it's interesting to me. And what I've learned is, which I didn't know, is that when my money is in an American bank account, the bank owns my money I don't own it, right? And so it's an important conceptual change. Like the bank basically takes your money and throws 90% of it around and invests it. And if it loses your money, well, you have insurance for $250,000 and that's it. And if they don't want to give it to you, they don't, you can sue and stuff. You have legal means to get it back eventually, but the physical custody of the asset lies with them. And so I feel like it's a fantastic example and just really reiterated to me how important it is to have independent, decentralized crypto rails over time, because we also see that extreme government positions are not that uncommon. And so I think this one was not the end of the world. Crypto companies have fraud, I can see how that could happen. But I don't want it to happen to a minority or something. If we're like, hey, I don't know, we don't like immigrants from Mexico, so every Mexican person bank account, if they have one, we just turn it off or something, kind of those things are I don't think any government should have that type of control anymore in our world. And so self-custodying crypto assets and rails that are independent of centralized interference is just something I believe is really, really important.
And I think you tweeted about this back in there as well, that you've been debanked personally also, right? Or not approved for loans and basic financial services and things like that.
Yeah, I don't know exactly how it happened, and I think sometimes it's also just the messaging from the government, right? I don't know what happened, but for example, I can't get a mortgage on my house. I can't get a loan facility. And I'm, in a very lucky position to be a tax-paying citizen in California and the US. And I also have a lot of assets, right? And so on paper, you would think that I have access to such services, and I don't, and there isn't really a lot of reason. It just means I get turned down. And even if I'm, I pay for my properties in cash and all that type of stuff. And if I want to have a loan on a house I fully paid off, then people will say, or said in the past, you work in crypto. Again, it's been told to us that we shouldn't really provide services to people like you. And it's interesting because there was no law around it. You know what I mean? The way the previous administration ran it is, it's not that they got a legal framework for this. They basically called banks and said, listen, we can't make it a law. We can't punish you really if you do it. But what we will do is, if you work with crypto companies, work with these people, we will find other ways to punish you, basically, right? Is kind of the letters that we've seen. And that's how they went about it. And that's one way to kill an industry, right? And so, because obviously crypto is still relatively small. And if you threaten big banks, if the US government says, if you bank these people, we're going to take a very good look into every other aspect of your business, they're not going to do it, And so it's a government, again, that's actually a great example of what a government shouldn't be doing without laws, for example, without a group of people and citizens coming together and saying, hey, let's actually, make a democratic decision on how we want to handle it, rather than exerting this sort of kind of soft hand violation of principal rights.
I think I have a bunch of follow-up questions, but in the interest of time, let's move forward. 2 quick company building topics before we move into product. You mentioned your commitment to the US, right? And how you've probably had these discussions at length. Should we stay here, even though it is limiting to the staking product, to access to banking, et cetera, And we both from Germany. What made you move to the US, and why are you excited about building there? And what's kind of the core value proposition to you and the company?
Yeah, it's a good question. I mean, I have a lot of gratitude to America, actually. As an immigrant, I don't think there's another country on earth where you can show up and ultimately build a company from scratch. That, we're now a $3 billion company. I've raised over $400 million from US investors. I think that's kind of unheard of in Europe, right? If you show up as a foreigner in Germany and are like, hey, by the way, I'm Francesco, and I want to build a business, and let me, can you guys loan me some money? And I mean, it's just not going to happen, And so I think the venture capital process in Europe is a little different, which I understand. It's actually not so much venture. Is what people want to see is a much more closed iterative result cycle, and so the risk appetite is a lot lower. Whereas technical R&D in the US is basically done by VC funds who take big bets on unproven things, right? And so that's a decision that basically systems make, right? And so when I started Blockdaemon, this was obviously in an unregulated technical field. I don't think in Germany anyone would have backed any crypto company in 2017 at least that built something without any clear product market fit, no idea how to sell it, and so forth. And then also to relatively quickly make a lot of capital available to me. Right. And so I was able to raise hundreds of millions of dollars basically in order to build something out, a vision of the future that was very hard to guarantee. And I think in my experience, that's kind of the main difference. Right. And I think in Europe, basically Wagniskapital isn't research and development capital. You know what I mean? And so I think in America, venture capital is more like R&D. They're more comfortable with like, there's going to be a lot of research that goes nowhere. And I think that appetite is a little less present in the European financial market. And so I think for me, that was, it wasn't a conscious decision. I always wanted to build startups in the US just because it's a thriving, fast-paced ecosystem. I felt things move a lot quicker. I've much better access to engineering talent and can hire and fire a lot faster and iterate. And so my personality is a lot more suited to here, even though, obviously, I was it's not obvious, but I was a Vorstand assistant to the board of Deutsche Telekom. Like I come from a German background and admire a lot about the structure there. But when it comes to entrepreneurship and building companies at scale fast, then, obviously Germany is not the place to go. I think there's one SAP is like the one technical company at scale that was developed in the last 20 years or something.
And even they are 50% America by now, I think.
Right. And so it's pretty incredible how poor Germany is that way. And actually another example that I think is kind of interesting, and not that it and I don't want to sound like a douchebag, but I think I'm from Germany, right? I've built a $3 billion plus crypto company from scratch. We have 70% market share. We work with all the big institutions, et cetera, et cetera. I don't think ever anyone in the German press, the German industry, nobody really is interested. You know what I mean? It's not that they're like, oh, hey, wait a minute. One of the larger stakeholders in crypto has actually worked at Deutsche Telekom. Why don't we ask him some questions? And it's interesting that mindset just doesn't exist in Germany. I feel like if I were a startup in Germany, I'd be one of the 5 largest startups built in the last 5 years or something, and so it's kind of interesting how there's also not really a culture to recognize that in Germany. People like me are probably viewed with a lot more suspicion, rightly and wrongly. My thing might still not work, right? Maybe I fail at a pretty large scale, but maybe I do. And so you don't know, but it's interesting to me how little interaction there also is basically with such an important technology.
Yeah, the German startup media, they only report on insolvencies, and they have these little updates that they look into the commercial registry of a startup and they see they're making a loss, and then they're reporting that. So I think part of us doing this podcast thing actually was I wanted to have my own platform in a way, right? Because the conversations were too annoying at times. No, I appreciate that, and I think. Well, was there ever a serious discussion internally to move the company somewhere else, like Asia, especially during the heights of regulatory scrutiny? I think maybe it's not Germany, right? But there are other places that could have made sense from a strategy point of view.
Yeah, Blockdaemon, we never, I never wanted to leave the US. The US is still the holy grail of a financial market. It's just so massively larger on every scale than any other market. But we obviously expanded internationally massively. And so we started offices in London and in Singapore. And so, half the company is now outside of the US. And so basically what happened is we basically stopped hiring in the US and hired elsewhere. And so now that was not a super conscious decision, but it was clear hey, if we can avoid recruiting in the US, let's avoid it and build up resources where we can make sure that if the hammer comes down too hard, we can continue operating out of different jurisdictions and stuff. And so basically what it taught us is to not be dependent on any region, right? Now we go back, obviously, and now we highlight that we're US domiciled. We've submitted opinions to the market structure bill. The headline is make the US stake again, for example. And we obviously wear that in very aggressively. And so now you see the opposite of that. Everybody's trying to rush back in and say, hey, we're really American. And so, but no, we never really wanted to leave. I'm a big fan of living in the US, and I'm also married here and I have kids here and they're American citizens and stuff. I was really adamant in pushing through here.
Let's talk about staking briefly. I think by the time this podcast goes live, you guys will have already announced the reintroduction of your staking services in the States. Maybe give us a TLDR What has happened there in the past? What are you guys doing now? And why is that exciting?
Yeah, so Blockdaemon is a little different than most other, for example, in staking. If you're in crypto, then it's a way to secure networks. It's often done for funds who own tokens. They want to earn yield, and they work with companies like us. We don't have a consumer-facing brand, and so our competitors have an ability where you can go on their websites and stake assets, for example, or they have little widgets in custodial, like in Ledger or something, where you can, their brand lives and you can directly interact with them. And we really weren't able to do that. We had our staking services up on our website, for example, in 23, and we just had to take it down. And basically it's our consumer business, and that was like 50% of our revenue, right? And so we have competitors who didn't have to do it and could continue to scale and market and suck up customers, whereas we were sitting on the sidelines. We've now are about to rectifying that. And so we're activating staking services directly through the Blockdaemon app and the Blockdaemon website, as well as via third-party widgets that providers can use. The main upside for us is that because of the heavy regulatory scrutiny, we really focused on institutions. And so we're really the only vendor to any of the big financial institutions in the world and uniquely qualified to sell to them. And we've learned a lot about security and practices. So I'd say we're probably the most professional enterprise-looking company in the space, meaning in terms of certifications and processes and having to sit in the US and dealing with all the security requirements that come with it. It's a very safe and secure tool for consumers. And so we're really going after that and market here in the US with a few different products. We also have a staking solution integrated into a wallet, which is really the fastest way for an institution to actually open a wallet and interact with crypto ecosystems. Also a B2B solution, but like integrated, easy staking services are important. And we're also launching a staking index token initially for institutions, but with a long-term view for consumers, where you just basically hold a token that earns yield across an aggregate network of staking protocols without you basically having to manage different wallets and stake and yield and restaking and all that sort of complexity. And that's something we're launching basically next week. All this stuff goes live. And, on the staking token side, it's going to take a little longer. That's a more complex ETF type product. But and so that's super exciting. And as I've mentioned, I think staking is also going to change a lot. And so we're going to do our part here. We provide, we're big partners of certain liquid staking networks as well, really looking into how to facilitate liquidity, movement, and yield generation also for users over time. Right now, staking is very expensive if you're an individual and you want to do it securely, which in the US, you got to go to Coinbase and you basically end up paying a lot of money for that service indirectly. And so we want to democratize that. And so that every institution can run easy consumer staking solutions at low cost. So the overall cost for consumers goes down.
Well, fingers crossed for the launch next week. And Konstantin, thank you so much for coming on the show. We're already at time. We didn't do half the topics I had planned to, but this was so much fun. Appreciate you taking the time. And thanks for everyone who's listening. We do this every week, so stay tuned and we'll be back.
Awesome. Thank you so much for having me.